Because if you look at Tesla today, Tesla's trading at $1,500. If I would have held these shares till today, I would be up over $1,000. Hey guys, welcome back to Fair Play Politics. It's your boy Junior here. It's a pleasure to have y'all back with me today. And today we're going to do something a little bit different. We're going to talk about stocks. Alright, so first and foremost, I want to state that I am not a licensed professional. Don't take my words as gospel. I'm just somebody that knows a little bit about the stock market and just wants to lend a helping hand to those that may be beginning their investing journeys. Also, I want to state that everything I say in this video comes from the perspective of a long-term investor. I don't trade stocks. I don't do options trading. I'm strictly long-term, buy and hold shares for months to years. Alright, the first step or tip that I have for those that are beginning their investing journeys is to choose an online brokerage to start investing with. So personally, I use Robinhood and WEBULL to invest. Due to the fact that they are both really good investing platforms, especially for beginners. They're both free and they give you free stocks whenever you first sign up on their platform. So in the description, I have links to both Robinhood and WEBULL. So whenever you click the link, it'll redirect you to their website or their app. From there, you can sign up and get a free stock. But I must say with WEBULL, you have to transfer $100 from your bank account to your WEBULL account to get that free stock. But however, Robinhood lets you get a free stock off the bat without you transferring any money. So if you don't have $100 laying around or readily available, just click the Robinhood link and you can start investing and get that free stock today. My second step, of course, is to create something called an emergency fund or rainy day fund. So what an emergency or rainy day fund really is just a large amount of money that you set aside to solve issues. You know, life happens, things come up all the time. You might get in a car accident, need to buy a car immediately to go to work or go to school. And I don't want you having to dip into your investing portfolio. I don't want you to touch the money that you're using to invest into the stock market. That money should be left alone. That money is sacred. I look at it as sacred money that you don't want to touch. You just want to leave it in there so it can multiply and exponentially grow as the years go on. So that's why it's really important to create that emergency or rainy day fund, and whenever things come up, you can dip into that to solve those problems. My third step is really obvious. Just invest for the long term, buy and hold your shares, and especially invest into dividend paying stocks. So you might ask, what is a dividend? So it's just a small payout that certain companies pay shareholders, investors. Some will pay you every month, some will pay you every quarter, which is every 3 months, and some will pay you every year. Dividends are a really nice way to earn passive income because you're not working, you're not doing nothing to get that bread. Literally all you did is invest into a company and they're sending you extra bread throughout the month or throughout the year. And the beauty of it, you can take that money and throw it back into the market and make even more money off the dividends that they paid you. Another reason why I'm kind of against trading and I preach long-term investing is due to the fact that 78 to 90% of traders or day traders lose money. And this is due to the fact that the stock market in the short term is really a gamble, honestly, because the stock market fluctuates every day. It goes up and down. Some days will be really good, some days will be really bad. And if you're just betting on that today you can make some bread or this week you can make some bread, you might end up losing all the bread that you put in that week and now you're fried. And this is why there's a popular phrase in the investing community that in the short term, the stock market is a casino. In the long term, it's a cash cow. Meaning that in the short term, stock market, you're really just gambling. You don't know what's going to happen because nobody can predict what the market's going to do on any given day. But in the long term, the stock market has proven, especially the United States stock market has proven to always yield a return on an investment. Always, no matter what. Even if it goes down for a few months or maybe a year, it's always going to go back up and surpass what it was at before. Two good examples of this is just looking at the S&P 500 and the Dow Jones stock indexes. A stock index, by the way, is just a measure of how the stock market is doing on a given day. It just gives us a snapshot into the stock market, lets us know how it's doing. Because different indexes are comprised of many different companies. Like the S&P 500 has 500 of the top United States companies. Dow Jones index has about 30 of the most profitable companies in America. By looking at those indexes, we get an idea of how the broader stock market is doing. And when you look at the S&P 500 and the Dow Jones for the last 40 years, you can see that it's consistently went up like crazy. And some months and some years, it'll dip a little bit due to a recession, but it always goes back up and surpasses where it was at in the past. And another reason why I'm kind of against trading, I just have a personal story about when I invested into Tesla back in March. So, back in March, due to the pandemic that came about, the stock market collapsed and a lot of the companies lost a lot of value and made for a very cheap bargain for a lot of us to get into these very expensive companies. So Tesla, prior to the crash, was at $900 really, and then it fell to $361. However, I bought into Tesla for $381 that day, right? That was a really great price to buy into Tesla. But me being the idiot that I am, I went the following week and sold Tesla at $529, trying to beat the stock market. But this thing showed me that timing the market doesn't work. What works is putting your time in the market. Don't try to time the market. Don't try to beat it. Because if you look at Tesla today, Tesla's trading at $1,500. If I would have held these shares till today, I would be up over $1,000. I made a $150 profit, but I could have been up over $1,000 if I would have held my shares. That's why you have to long-term invest. Don't trade. If you're investing into quality companies, you'll be straight and you'll make a crazy return on investment. And just look at Tesla for me. If I would have held on to Tesla, I'd be up like crazy in the market right now. But it's all good, man. You live and learn from your mistakes. The main thing I want y'all to take away is to really invest into quality companies, invest for the long long term. Try to limit how often you trade because you're really just gambling, honestly. So my fourth step is to create a plan for how you're going to invest. Many times people ask me, they'll be like, Junior, I want to begin investing today, but how much money should I throw into the market? And I always tell them, better to start off with putting like $25 or $50 into the stock market and learning how to tolerate the swings, the up and downs of the stock market. Market goes up and down like crazy every day. And I don't want you to throw in $100 today, expect like a freaking $10, $15 return, and then you end up losing $20 today and you panic sell the stock and then you end up locking in your losses and losing that money. Don't put too much that you can't handle at first. And once you're able to adjust and tolerate those swings in the market, then you can invest more. But personally, the way I go about investing is I put $100 in the stock market every week and I buy mostly dividend paying stocks. And I especially like the ones that pay monthly dividends. I like that extra bread. And I'm able to tolerate the swings in the market because I've adjusted. I know that this is long term, this is not short term. I'm not worried about short term profits, short term losses. My main objective is by the end of the year, by the end of 5 years, by the end of 10 years, that I make a good return on my investment. But as long as you invest into high quality companies that have a proven track record of being profitable, you'll be straight. You'll make bread. You ain't got to worry about nothing. And when you go about investing into stocks, make sure you read articles about them, learn about the companies, learn about their business model, their business plans, their sector. Is their sector becoming more profitable or is it losing profitability as time goes on? Do your research. Pay attention to news. Know what's going on in the world. Not just for the stock market's sake, but also for your own sake as well. And don't just invest into a stock because your friend told you it's going to blow up this week or this month. Your friend probably knows very little about that specific company. So do your own research and know what's actually going on. Don't let other people influence you. The thing to remember is that you're the one that's investing. Your friends aren't investing for you. You need to do your due diligence when it comes to what you're putting your money into. All right, so my fifth and final tip for those that are beginning investing into the stock market is to invest in both single stocks and ETFs. And ETF stands for exchange traded funds, and they're a very good way for you to add more diversity into your portfolio and lower your risk. And most of the top investors recommend for average people to invest into ETFs due to the fact that you don't have to constantly pay attention to the news, pay attention to what's going on in the world. You don't have to actually watch your stock daily due to the fact that ETFs are comprised of hundreds of different companies. For example, the SPY and VOO ETFs both have the top 500 United States companies inside of them. So due to that diversification, even if some stocks inside of that ETF do bad this month or this week or this year, it won't take the entire ETF. ETFs help you hedge your losses and minimize your loss. But the really good thing about investing into single stocks is that if the stock you invested into does really good, you make a lot of money. But if it does really bad, you lose a lot of money too. And that's where the ETFs can help you out your portfolio. So that's why I recommend for you to have a mixture of single stocks and ETFs so you can just diversify your portfolio and have more gains than losses. And I'm going to give you guys an example by looking at my Robinhood portfolio. As you can see, 89% of my portfolio is single stocks, only 10% is ETFs. I'm slowly investing more money into ETFs, especially like those that pay good dividends. My goal is to get the single stock number down to about 65% and move 35% to my ETFs so I can minimize my risk and also maximize my returns by diversifying my portfolio. So the main things I want y'all to take away from this video is to first create an emergency fund of at least $1,000 or try to get it to $1,000 and then grow it from there. Second thing is to invest for the long term. Buy and hold your stocks, especially dividend stocks. Investing for the long term yields the most returns from the average person. And lastly, be patient and stick to your plan. Whatever your plan is, stick to it. So if your plan is to invest $100 a week like me, continue doing that. Regardless if the stock market is going up or going down, it doesn't matter. Just stick to your plan. And also have a stock market investing group chat where I post stocks that I'm investing in. I have a dividend spreadsheet that shows you all the dividends I receive from different companies. Also, I post articles to give advice and analysis to my members in my group chat just to help them with their own investing journeys as well. So yeah, if you're interested in joining my investing group chat, follow me on Twitter at callmejre and DM me and I can plug you into the group chat. So yeah, I hope you guys enjoyed this video and found it informative. If you did, please give me a thumbs up and subscribe. Also follow me on Twitter like I previously stated at callmejre. Pleasure to have you guys back with me today. Y'all take care. Y'all stay safe. Stay blessed. I'll catch y'all later.